Hello students and good day to you all. Today it is the 8th of February 2018. We're in the middle of the US markets time frame at the moment, and it seems like red has been hitting the markets all over again. Today we're going to start by talking about the US dollar. It has a lot of meaning toward the cryptocurrency market and the US market as well. We can see that we've got some movements over there, and we'll try to explain them according to what's going on in the US market right now. But we will refer to the crypto market as well. So without further ado, let's move forward to our chart station. And again, the first thing that we will pay attention to is the US dollar. So for the past approximately 2 months, we will see that in a second. Okay, so since November, or let's say December, that's when we took this trade, we were expecting the dollar to lose strength in the market, to keep on losing strength. And we saw that as the euro was gaining strength in front of the US dollar. Now, that was very logical when we saw the US market gaining strength, meaning that dollars are being placed inside the market, invested in the market, and therefore we've got more fluent dollars in the market. And in this case, by having a larger amount of free available cash in the market, we know that the dollar should lose its value. So we're expecting to receive an uptrend on the US stock market. In this case, what we're seeing right now is that the US market is losing strength widely, and we can see that the dollar is regaining its strength. Look at the past approximately week, 7 days of trading, 1, 2, 3, 4, 5, meaning approximately a week in terms of a time frame. We see that the dollar is gaining strength. In this case, the euro is losing strength, the dollar is gaining strength. And we understand that by pulling funds from the US market, and we know that indices in the United States right now are losing a lot of strength, and there's a lot of panic out there. So by receiving this panic, we understand that traders pulling funds out of the US stock market, and by that they add to the strength of the currency. Okay? By adding to the strength of the currency, obviously, demand equals higher value. So in this case, we see that the dollar is gaining strength on a global scale, okay, in front of a lot of assets out there. Just before we move forward to the crypto market, I'd like to focus a bit on a lower time frame to show you what is my expectation based on this specific structure. So moving forward to an hourly chart and zooming out a bit, what we're seeing in front of us is an uptrend that is divided to 5 waves, as we're used to see, and we see a downtrend movement. Now, the big question is whether this is an initial downtrend movement, beginning of a larger movement for a downtrend potential, meaning a stronger dollar for the long term, or we're looking for a small deviation, small corrective pattern before we will move forward to a higher rate. So in order for me to answer this specific question, just for a second, we will move backward to a 4-hour chart. What we're seeing in front of us is that we've got a large 5-wave movement. You know what? Let's divide that first of all on a daily chart. So we've got a 1, a 2, a 3, a 4, and a 5, meaning that right now we're in a 5th wave of a large scale movement. Just to give notes for each and every movement, we can see that we've got some sort of first wave over here, a second wave, a large scale third wave, a 4th wave, and right now we're in the making of the 5th wave. Okay, I was talking about a larger uptrend movement. I was talking about a higher peak on this specific potential. So let's understand, in this specific 5th wave, if we will drop lower to a lower time frame, we will see that we've got an inner structure that we can analyze, and according to that, make an assessment regarding this current potential. And again, it has a lot to do with the crypto market. Once I'll get to the crypto market, I want to use this example in order for us to explain other structures that we will see over there. So bear with me just for one more second. We've got an hourly chart over here. We've marked this territory as a 5th wave, and right now, looking at this structure, we understand that we're in a middle of a 3rd wave making and a 4th wave pullback. So going back to an hourly chart, what we can see in front of us over here is again the structure of a beginning of a 5-wave full structure. We've got the first uptrend movement, that is the 1, we've got the 2, we've got the additional 3rd wave, and let me just place this over here. I'll mark that on the chart in a second. So my assessment is indeed that we will see this dollar continuing its downtrend movement, and then we will return to the uptrend movement. Again, we've got a first, a second, a third, and a fourth wave in the making at the moment. And our assessment is to see a continuance of an uptrend that will climb forward toward the target that we've marked several months ago. So let's take this assessment and try to make reason out of it. We saw that the US market is losing strength, and we can see that the dollar is gaining strength. Now our assessment over here, based on this chart, is that we will see the dollar gaining additional strength for the next several days. Okay, nothing large. And from that point and forward, we're expecting it to return to the uptrend. So let's try to make the connection for the US market specifically, and then we will again attach that to the crypto market as well. Our assessment is that we will see the dollar beginning to lose its strength and the US market regaining its strength. And why am I saying that? Because at the moment, what we're seeing in front of us, based on this structure, is that we've got a third wave and a corrective pattern that corrects its structure. If we will erase all the other descriptions or the different definition of waves, we can just analyze this specific structure. We've got an uptrend movement. I remind you that is the third wave, and we've got a zigzag, an A, a B, and a C wave in the making. And we can see that this 1.6% is penetrating the territory between the 38.2% and the 50%. Now, I'd like to explain something about the Elliott Wave. Usually, when we've got such a large, strong uptrend movement over here that we see since December, this uptrend movement will usually result in a smaller pullback than expected. We usually expect the pullback to reach between the 50% to the 60% level. Now we might see that. I'm not saying it we won't, but I'm just saying that it's more logical to see this specific structure closing between the 38% to the 50% of a retracement. So approximately this territory will be a logical pullback that we're expecting to receive from this specific chart. And it's not only that, but also what we've got over here is an A, B, and C pattern. If you've watched our other videos, you know what we mean. We've got an A, B, and C pattern, C in the making, okay? So the C wave will usually divide to 5 waves. We've got a first wave, a second wave, a third wave in the making. We're expecting to see a fourth wave climbing up and a dropping down of a fifth wave, just the same as we're seeing on the larger scale. So again, for the next several days, my assessment is to see the dollar bouncing, continuing to bounce around these territories, nothing large, and from that point and forward, starting to climb up. Once it will do that, it means that we regained confidence in some market, and that is the important note, in some market. For example, think about that. We've got a lot of available capital at the moment. If we will see an uptrend movement, a stronger, confident movement on the crypto market, we will see large capital being pushed toward the crypto market. And this is, again, a very large question that we need to ask ourselves. What has the better potential, whether the regular market or the crypto market? The money has to go somewhere. Several years ago, I would definitely say that we can expect to receive a stronger gold in the market. Okay, because panic, traders pulling funds or investors pulling funds out of the US stock market, they will do something with their capital. Okay, so usually the safe haven was the gold, but we saw that it's starting to move toward the crypto market. Let's move forward and analyze the crypto market and make some assessments regarding the major currencies over there. So obviously we will start with the Bitcoin. Our assessment over here on the Bitcoin was to see a downtrend movement toward the $8,000 value. As you can see, it indeed penetrated this territory and went even lower toward the $6,000 for one Bitcoin. But generally, we can see that we've got a fluctuation level around this territory. And I told you last week when we were here, if I'm not mistaken, I told you that we might see a bit more downtrend before we will see a pullback. But that is a very logical area where I'm expecting the market to start regaining its strength. Let's look at the larger image on the daily chart. And over here, let's again just mark all the regular instruments that we're using. We've got the large scale of an uptrend movement. We've got the ABC pattern. Okay, and we can see that indeed we've reached a completion of this structure in terms of the Elliott Wave. Okay, we've reached the completion of this structure right now at the 100%. Again, just returning on the same ideas. We've got a zigzag over here. That is the A wave of the correction, a B wave, and a C wave. And usually what we will see on the C wave is that the C wave is equivalent in terms of length to the A wave. And this is exactly what this instrument is measuring, the red lines. They measure the potential of the C wave to be equivalent in terms of length to the A wave. So right now, in terms of the Elliott Wave, we've reached a completion of this specific structure, and we can start looking for an uptrend potential. For the more careful traders out there, I would definitely advise to place a trend line above this territory, above the entire downtrend movement, and only by crossing this territory right now above the 8800, that will be a logical place to catch an additional uptrend movement on this specific market. Another thing that I'd like to mention is that if we will zoom out and look at these territories over here, for example, and over here, for example, we've received approximately the same measurements of change. Let's move forward to an hourly chart and look at this specific structure. Okay, so what we can see over here is again something that occurred at approximately August last year. And again, we can see a 5 wave of an uptrend movement. A 1, a 2, a 3, a 4, and a 5. And we can see a corrective pattern dropping down. Okay, now let's again place the same instruments, the same measurements, just to understand that this structure specifically is an uptrend movement. Okay, it's an impulse movement, as we would like to call it. And this corrective pattern is correcting a percentage, a proportion of this uptrend movement. So in order for us to define the proportion, we need to divide this territory for the different probabilities in terms of percentage. So we've got an uptrend movement, we've got a downtrend movement. As you can see, this downtrend movement precisely reached the 61.8% and continued its uptrend movement. And this is why it's a very logical pullback. But that's not the only thing that we're looking at once we're analyzing the market according to this method, but also the inner structure of the corrective pattern. Okay, so in this case, again, I'll place the same instruments. We've got an A wave, a B wave, and a C wave. And you can see that in this case, the C wave was equivalent to 1.618 of the first A wave. Okay, so we've got a bit of a different measurement over here, but still you can see the instrument, how they're being used on different scales, on different time frames, and how the structure itself remains the same. So we can expect to receive the same structure on a larger scale right now, but again, the same structure in terms of measurements, the equivalent of one wave to another, the equivalent of measurements, the potential of pullbacks and structures. So in this case, again, we can even analyze the additional structure that we've got over here, the next corrective pattern before we began this significant uptrend movement, or we can even look at this structure specifically. All are the same. They are all connections between impulse movements and corrective pattern. So again, I understand that we see a large market movement and we see a large drop down. So a lot of traders out there express panic, but still the potential is to see an uptrend movement. No question about that. In terms of structure, this is a liquid impulse movement, meaning that traders saw the potential out there. Okay, so over here we had some issues. Some bank over here, some market over here, a country said this, a country said that. Regardless, we can see that generally the market believes in this asset, and we can still see it with a potential to express additional uptrend from the current rate. Another thing that we will pay attention to is the Ethereum. Okay, so I remind you, Let's go over the analysis that we had, I don't know, 2 weeks ago or a bit more than that. It was approximately over here. I'm talking about the beginning of approximately the 27th, 26th of January. We were expecting the Ethereum to continue its downtrend movement. And again, I'll just place the instrument. We did that based on this line over here and this line over here. Okay, all this structure, that is an A, the B wave climbing up, and our assessment was to see the C wave dropping down toward the 100 level. I've mentioned this territory, and indeed you can see that we've dropped down, touched the line, and bounced back up again. Amazingly bounced back up again with a very, very accurate target over here. So again, our assessment from the Ethereum is to see it climbing up and reaching the peak on the 1400 level, and again moving forward to a higher rate, as well as this specific structure is only a small structure among a larger scale structure that we're expecting to receive during 2018. So a very large potential over here for a double or even more than that from the current rate. And that will be all for today. Again, if you need additional assistance, you can always contact us through our website, that is thefinancial-academy.com. I wish you all the best with your trades. Have a pleasant weekend, and bye bye.